We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
All right, welcome back, everyone. Happy Monday. What a crazy day today and Friday was. I apologize in advance if I, take a lot of drinks during this live stream. I'm kind of recovering from a bit of a cough or whatever it is I had, but so my let's say my voice is fully back, but on occasion I have to take a sip of water in order to continue talking. Okay, so we have a lot to cover. The topics are listed in the title, wherever it is. Actually, it's below me, the title, and also in the description, you can see the timestamps listed. That is going to be our guide. That is not exactly where we're going to end off. There's, of course, the questions that if you guys ask us throughout the live stream, we'll try to get through to all of them. You guys always ask good questions. So, you guys know, if you guys are new to the channel, you're just watching, we are not one that likes to, kind of spread a lot of, well, if you want to call this FUD. The title itself is more of a joke to how a lot of videos have come out about this and people panicking, etc. And you guys can actually tell I'm being a little bit sarcastic by the question I have for you guys, the polling question. So be sure to answer that. But quite literally, this man just kind of predicts where the bottoms are. So you guys should all follow him on Twitter and just watch for whatever he says, because the opposite tends to be true. But yeah, go ahead and answer if you're ready for his fifth crash prediction. So before we kind of get into the juicy stuff, we're going to be talking about the yen Cary trade, the unfolding of that. We got some interesting data on Friday that may or may not have triggered and sort of culminated into a perfect storm. We saw a massive increase in volatility. If you had a meme position in something like the VIX, as Bacon would say, you did fairly well. But that's again not something to be taken seriously as a valid strategy or a long-term strategy. It's more of a fun trade. But anyways, so talking about the yen Cary trade, I think we should discuss first just like a yen Cary trade for dummies introduction as to what it is that happened. So for what you need to understand is, for a long period of time, or actually let's take a step back, different countries have different interest rates. That's something to at least start there. So when you have the United States, you have Japan, you have Europe, so in the ECB, they all have different interest rates pertaining to their currency and their debt instruments. And I might as well mention Canada, so because I went North America, Europe. But anyways, so we have in Japan for a long period of time very low interest rates, and at points in time they were even at negative interest rates. And what came about is this thing called, or as known as, a Cary trade. It wasn't created from that, but it was used a lot as a tool. So the premise of a Cary trade, or the basic idea that you need to understand, is you borrow in that currency in that country, and then you take that capital that you've borrowed and you purchase assets in another country. And so on the face of it, it sounds really interesting, especially when you have, really low interest rates over here and higher yielding assets over here, and the currency strengths are relatively stable. So the yen and the US dollar, pretty stable currencies, all things considered. It's not like you're getting a currency with ultra low interest rates that's, inflating to hell. And in fact, actually, that'd be to your benefit. But they're relatively stable currencies, fairly predictable, all things considered. You're not going to expect some crazy, wacky changes. However, we did see a rally in the yen, but that actually only took up back to where it was at the beginning of the year, which is kind of funny. But anyways, so what you need to understand is there were a lot of institutions, entities that had all this capital tied up in the US that were seemingly potentially unwinding it. And at the end of the day, all we can do is sort of speculate as to the cause. We can make guesses, but there's not really something I can give you as of now that says this is 100% without a shot of a doubt. There's a lot of stuff that suggests this is what is happening. but not a lot that says for 100% sure this is the cause of it, the mechanisms, etc. We're kind of just, I just want to make that point very clear. Okay, so we're not making a claim of certainty. So, but what we can observe, all right, without, any doubt, is the reactions the markets had today. And so if you guys were, waking up today thinking, oh, today's going to be a normal, well, guaranteed most of you weren't, because you guys probably saw on the internet that, they were calling this Black Monday. Friday was already a pretty bad day. And then right on market open, many stocks down 10% or more, stocks that in the past 6 months or so were the darlings of the market. So my question to you audience members is, were you able to take advantage of that? So for the club members, I made my buys roughly in the morning hours when the market opened, and I didn't, obviously if we start rallying from here on, I'll wish I bought more, but I bought some shares of various companies that we talk about here on the live stream. We're going to talk about on the live stream today, anyways. And yeah, it looks like for the time being, tomorrow looks like it's going to be a positive day. Nikkei is up 10%. By the way, just want to say for the record that I think the Nikkei is a very poor measure of the Japanese stock market because it's not consistent with what we use as a barometer for the US stock market. It would be the equivalent of saying the Dow Jones is the perfect barometer of the US stock market. That's the Nikkei, because it's a price-weighted index. And every time I see someone use it as a measuring stick of how the Japanese stock market is doing, I always like to go, the meme, but actually, that's unfortunately me. Every time I see someone say the Nikkei is outperforming the S&P 500, like So, Andrew, real quick, check your mic just to make sure.
Yo.
Oh, it's perfect. Oh, it's perfect.
It's not the crappy mic.
No.
I do have a bone to pick. People were calling this Black Monday. I don't think that people have any idea what 1987 Black Monday was. If you're even comparing this to that, that's my only bone to pick. Do you know how much the Dow was down on Black Monday?
How much was it down?
22.5%.
My goodness. Yeah, that's not even comparable.
Yeah. A 3% down day. It's like who cares? Although I was kind of excited to open. I was like, oh, okay, we might have like a 5-6% down day. This might get like
yeah, I was more excited because that's why I did hold off. Mm-hmm. I thought we were gonna have sort of like a panic build out through. So I made my buys and I shorted some more of what.
Yeah.
And then the companies that ended up buying, actually no, one of them kind of stayed suppressed, but TSM, like that was a fast, rapid recovery. It was down. Let me pull it up actually, so everyone can see it.
These were fast. I was like, oh yeah, we're getting like a sell off. Cool. Although
no, look, it literally opened at 133. Like you could have been buying TSM at $133. End of the day, I'll stop it at before market close. 10.52% intraday move. That is insane. So it was pretty crazy. I mean, you throw a rock and some of these high quality companies just absolutely getting wrecked. Nvidia still closed down 6%. Let me pull this up. Oh, I didn't put this in the title, but we might as well talk about Intel at some point. We'll push it towards the end because we have some good stuff to get through. Okay. But yes, Cary Trade. Oh, let me check on how we are on time because I have these. We don't have to stick to it 100%, but I think we're already past our Cary Trade. Oh no, we're good. Never mind. We have about 5 or so minutes to talk about. If you have anything else to discuss with us.
Yeah. So a couple things. One is, I think like this was a combination of things, but I don't think that like this is by itself just a one-off and everything will recover from here necessarily. Like I do think there are other things that were showing signs of weakness, like unemployment rising. I think it was ISM manufacturing was weak, or was ISM manufacturing the one that was strong today? Well, there was one manufacturing index that was weak, one that was strong. You're seeing some like not great signals. And I think the S&P was kind of richly valued anyways. In fact, one prediction I had that's now looking really aging like a fine wine is I said we'd have a 5 to 10% correction. I thought was a strong possibility. So, and I think that we also were right that it looks like this recession is real, like, or these sell-offs, people are worried about the consumer. So I don't think the market rallying and be like, oh, the Cary trade is over one. We don't know how long this
No
young
idea.
Cary trade could go for, like how much leverage there is in the system. If that's even what really happened today, it seems like it is, but who knows? And then two, there's other factors, other fundamental factors that could actually lead to more red days in the future. After the last week sell-off or so, I feel pretty good about like some companies' valuations. But I think it might look good in the short term if you like just spent all your cash today. I don't know how it's going to play out though, maybe 2-3 months from now, but we'll see.
Yeah, sometimes it takes some time to let this kind of go through. One of the members was actually talking to me about, hey, well, they were nice enough to make a suggestion of kind of holding off too, which I could. I still have a good amount of firepower to kind of let loose.
Dude, I
want to say, I think it was services. I'm trying to remember. I think it was services that came in weak. And I think services is the more sensitive and elastic one.
That makes sense.
If I remember correctly. I could be misremembering. Chat can correct me on that, but I believe that it's services that tends to be more of a rapid change, and then the other one starts to change later down the road. So it's more of a signal. It's a signal that on a forward basis, it's going to get worse. Which we have the yield curve is uninverting, and typically we see the observable recession post uninversion.
Right. That's another big indicator. And like none of these mean that 100% is going to happen, but like you're seeing cracks. And if you're seeing cracks, you probably shouldn't be levered up on margin and consumer discretionary or lever margin into crypto,
Yes.
So
which, speaking of, how did crypto do today?
Crypto did very good today if you were short.
That was a good little very good today if you were short. Twist.
Yeah. Let's see. Going into
which one should I pull
last
up?
night, Bitcoin I think was around 60,000. It dropped all the way down to like 50. It's kind of recovered back to like 55, 56,000. But
it was
still
that easy.
Still rough.
Yeah, at one point it was down almost 20%, 17%. Not too shabby. Not too shabby. I know that some of the shit coins, pardon my French, did really, they got wrecked today. So, and I mean, oh my gosh. Well, there was so much today. There was so much that was just, at least in the morning, I really did get a little disappointed with the recovery we saw, but I got some buys in.
So funny story is, I think I told you this morning, but like I wake up and I'm like, stock market's down, like, and I have a portfolio position like that I thought was pretty well positioned for this, but I also like we have money in savings that we could use and then just backfill with like checks later. And so I go, my wife, I'm like, all right, honey, markets might be down like 6-7% today. If that happens, I'm pulling in some money out of savings. Is that cool? She's like, yeah, okay, cool. So I get to my office and I'm kind of watching things. And I don't like just open up, at 7:30 and just blow everything. So I'm kind of just sitting there and buying some stuff, and the market's recovering. I'm like, damn it. and my wife's like, oh, did you move any money? I'm like, no, this is a dip. This is a crash for ants. And I was getting excited for like a bigger sell-off, but did you see? Oh, go ahead.
No. Yep.
The craziest recovery to me today was CrowdStrike intraday recovery.
Let me pull them up. I know they dipped below 200, right? At one point.
Yeah.
No, that's not that crazy. TSM was crazier.
Was it really? Because these guys were at like 191 or something, weren't they? And they went up to 222.
Yeah, no. I'm
Oh,
telling
that
you.
only says 201. No, these guys were below 200 for sure today. CrowdStrike. Someone tell me I'm not crazy. I know I saw them below 200 today.
I guess they were. I'll take your word for that they were. Well, right here, 201.74 says on the open.
Maybe I was looking at pre-market. Who knows? Pre-market stuff was down a lot. So
Yeah, I think TSM was also down insane. I'm not trying to take away from your CrowdStrike, I swear.
No.
Like, this is the TSM movement. Let me capture it. Oh my god. 10.72.
Caleb is saying pull up Bank of Japan.
I think it's BOJ. No, just do Bank of Japan.
I have the Fred one. I don't know if that's the one he's talking about or if he's talking about something more recent. No, he's talking about the Bank of Japan balance sheet, he said.
Oh, okay.
Their central bank's balance sheet. I don't know if he's talking about the Fred one or not, though. I have the Fred one here, but to me, it doesn't look any crazier than the U.S. balance sheet.
It's all the same. All right. So the next topic that we have for a conversation is one that, I mean, it's a company that we both like. We hate the management team. And something big happened to them. Something really big. At least people are freaking out about it. So let me not bury the lead. It's Google. We can talk about their earnings. We haven't talked about that publicly, our thoughts on the earnings. But recently, as of today, the Department of Justice has filed, or actually, it wasn't Department of Justice. I apologize. It was a judge ruled against them in an antitrust case where Apple, they were paying Apple, I think it was now over $20 billion a year.
Not a flat fee, but yeah.
Yeah, because it keeps growing.
Right. It's a percentage-based fee.
It's a percentage-based fee, which is pretty insane. Because, yeah, that's right. We didn't get color into that before. This lawsuit brought a lot of things to light. Yeah. So there's a couple ways to look at the, whatchamacallit, the ruling. One's a positive look and one's a negative look. I think the negative look, everyone knows, which is now they're no longer going to be the default. Now maybe someone else can be the default, and a lot of people may not switch. What are your thoughts on that?
Well, I don't think anyone else is going to be the default. I don't think Apple can make anyone else the default. If someone just came in and was like, you can't make Google the default, and they're like, oh, but you can make Bing the default. Actually, that'd be so Microsoft. That's probably what's going to happen. I just think, how does Microsoft always win their court cases and Google always lose theirs?
Microsoft has the best lawyers and the most well connected, I swear. They can buy Blizzard.
I feel like,
but Amazon can't buy a vacuum company. Just saying. Everyone in the chat, tell me I'm wrong.
Remember that hospitality programmatic advertising company that was worth like $40 million in that acquisition by IQV got blocked because it would create like a monopoly in the hospital programmatic advertising market. I'm like, what?
How many eggs on face does this do these regulators have to take? Because it's like they allow the Microsoft Activision Blizzard deal to go through. That's huge. They don't allow the vacuum cleaner to go through. They don't allow the JetBlue and Spirit, and Spirit's just going to die. Like, we're just going to have one less airliner now. It's just going to die and be taken apart. They didn't let that one that you just mentioned go through. Capri Holdings and what's the other one? Tapestry.
You got blocked?
Well, no. But they're fighting it. It's like, come on. It's like you're just fighting everything. But you're not fighting the ones that maybe make a little more sense. Activision Blizzard and Microsoft, because Microsoft owns Xbox. And they would be owning one of the largest. They'd be owning the largest at that time game developer. Like, that was a bit more of a...
My argument for the Google one, and let me just also say, Google is the perfect example of like, what is it, like hard times create strong men create easy times, easy times create weak men. Alphabet's been like easy times for 20 years. These people just like
terrible management,
terrible like work culture. Everything I read about, it's just like a joke of a almost like it sounds like organizationally a joke. But one of the things I don't get is, okay, so you say that Apple and Google can't do this, right? So they're saying that Google can't pay Apple to be the default browser, right? Okay. So what's the alternative? Does
Bing, DuckDuckGo.
but like, no, because what you're saying is no one can pay Apple to be their default browser, I think.
Yeah.
Right? So if no one can pay Apple to be the default browser, does that mean Apple has to make their own browser and then Apple just has the monopoly?
It's a lot of effort, for lowering the quality.
So does Apple just have some like random ass? They're just like, oh, I wonder if you know what Google could do? Could Google make like a contract with any? They could technically say like any phone company, we pay you a certain royalty based on the searches you get on our phone, or you get the searches that your phones do through Google, and then it kind of ends up being the same thing, except it's like not explicit. So like, because they own Android, so they don't care about Android phones. Like if Android wants to, if they pay Android, it's all money moving back and forth anyways.
Yeah.
So they could say, hey, Google has a new policy for mobile applications. If you are a cell phone company and through your cell phone, our search function gets used, we give you a royalty. Like, I'm just trying to think, like, to me, it almost feels like Google's still going to somehow be the default browser and Apple's still going to find a way to get this kickback. It's just how. Now, with that being said, this might be bad for Apple, and maybe that's why Buffett wanted to get out of Apple.
Yes. I had a discussion with someone earlier today on that. I don't think it's necessarily got the envelope or anything like that. It's just that he made a calculated decision. We knew that this was a threat on the horizon. This was not like oh wow, that came out of nowhere. No, this was discussed, and something that's 40% of Berkshire. You can imagine that he was paying attention to this, at least considering it as a risk, and then couple that with the I don't know, trading at over 30 times forward earnings.
But like, I mean, it doesn't have to. When I say like he knew this, I'm not saying insider info. I'm saying you have super amazing lawyers who are sitting in on these hearings on call saying like, hey, what's going on? They're like, oh, based on what I'm hearing, Google and Apple are going to lose. He's like, and the other thing we knew is he started selling Apple Q1. And like, I felt like people asked him, hey, why are you selling Apple? And his answer was so wishy-washy. It was like, well, sometimes you got to like sell companies so that you like are positioned correctly. We like Apple. We love Apple. But, you know, sometimes you got to free up space. I'm like, dude, you got 160 billion on your balance sheet. What are you talking about? and so I thought, yeah, he's trying to.
He couldn't crush it while he's selling.
Right. No, I mean, for sure. Buffett has a very nice demeanor, but I mean, he
has to look out for his shareholders first.
Mm-hmm.
That's true. He is not. If you're not a Berkshire Hathaway shareholder, come on, what does he owe you?
Mm-hmm.
So, anyways, so I think we both view it the same way because you pushed it right to potentially it's actually going to be good for Alphabet. If they don't have to do any kickback, like it's not allowed. I think, I don't know, just like consumer behavior is so tied to just a Google search. I think some of the fringes of people will kind of, use other products because they already do though.
Yeah.
But most people just switch or go back to Google.
But I don't know if Google's going to win no matter what. That'd be so funny if this is how inept Google's management is, that they've been just like shilling $20 billion when they
that would be, I would hate them so much more. I would be like, these guys suck so bad.
It wouldn't surprise me though with how bad they are. I don't feel like people understand how like bad this management team is. They fumbled on AI so bad. Like yeah, it seems like they're maybe catching up, but the amount of like mistakes that they made, I don't know. It's just, yeah. So I don't know. I still hold a little bit of Google, and every day I'm like, it's like the stepchild I hate. I'm just looking at like,
Yeah. I have some of the same feelings. We've talked about this in prior live streams. Just it's a company with so much potential, Disney. But just like blundering or fumbling the ball at every chance they get. But the assets are just that good that even with this management team, it does pretty good. The assets that I'm most excited for is Google Cloud. I've been really excited to see that story play out. That is growing quite nicely, and that's actually the business I'm most or second most bullish on. On the other fronts, some of their other offerings are doing really well. You know, YouTube Premium, you've raged about that for a long while, and that's still pulling through. I think it's still going to pull through. So,
YouTube
but Google
Premium is
Cloud,
awesome. Google
yeah,
Cloud's
no, it really is. It really is. So, Alphabet, I think what we have here, though, despite the management team sucking, it's kind of like that Buffett adage. It's like buy a company with assets that an idiot could run. We kind of,
But they're running like the idiots been running for so long that now like some of the assets like GCP was never like the front runner. I don't think people think there's an issue with search, Google search. I don't think there's an issue. They completely blundered on the whole AI thing though. The LLMs at least, but like just in general, it feels like they've been behind on AI, even though they
they're
had like
getting
10-year
better.
or we'd say like a 5-year head start.
They're getting better, but Meta did leapfrog them just now.
And the LLMs, I don't know about on the like the back end stuff. I think OpenAI is still the best there, from my understanding.
On the back end stuff,
Yeah, like business APIs, making apps with AI, stuff like that. From people that I talk to who actually build apps with that, they still prefer OpenAI.
really?
Yeah, I was actually just talking to someone today about that, and they basically said like, I was like, well, isn't like hasn't Meta don't they have really good AI? And he's like, for what, LLMs? And it's like, yeah, and he's like, dude, no one cares about that. He's like, it's the backend APIs that you build stuff on. So,
Well, no, to my understanding, there's the LLM part that people interact with, but then there's the other stuff that Llama 3 is capable of, but not for stuff that we can do.
yeah. So
like,
maybe he just didn't know about that aspect, but that's what I was kind of.
Because, for example, that's the point of like where AWS comes in. AWS has been playing, kind of coming in as Switzerland and saying you can use anything on our stuff. Why else? Why would you use Llama 3 or Llama 3.5 or whatever it's on? Why would you use that if it's just a LLM chatbot?
Yeah, I mean, I just know they were explaining to me some of the apps that he built, and it was.
Oh, I know who you spoke to.
Yeah.
Makes sense.
Yeah.
Well, that's it. All right. So they are really bullish OpenAI. How much do they? Well, you don't tell me a dollar figure, but do they pay a lot to OpenAI?
I didn't ask that question.
Oh, that's a good question to ask because I'm trying to figure out how they're going to make money longer term.
Yeah, that is a question to ask.
Yeah, because their cloud fees, which funnily enough, a lot of it still happens on AWS. It's supposed to switch over in the future to just using Azure. So in theory, those costs should be somewhat covered, but because that's how Microsoft bought that 50% ownership was through cloud usage. So would you buy more Alphabet here at these prices?
No.
Like a nibble? No, you're done. Yeah, he's not interested. Ladies and gentlemen, he's not interested.
I don't have any.
He does not.
Any faith in this management team. They're like the most not only are like, they have so many good assets, but this management team is just like, yeah, they're just like, I've never seen a group of less charismatic, less shareholder caring, less people that do less with more than these people. And so maybe you're like, well, it can't get much worse. Like if management's a 1, the only place to go is up. But I think these people could surprise you. I think, like, I don't know.
That's damning. That's a damning remark. I think these guys are that dumb. They'll surprise you. Wow.
Yeah, I don't know, man.
Well, okay. I think we're preaching to the choir here about it's a terribly managed business, but the assets have been that good, at least in the past, that it's actually done fairly okay. Or fairly well. Not fairly okay. It has done fairly well. But other businesses like Meta have, in my opinion, and I think you agree with this, much better managers at the helm.
Yes.
So
much.
Which continues to make me I mean, I'm not selling Meta. I haven't sold Meta. There's no reason to. It hasn't given me any reason to sell it. Besides those those calls that we're not going to get to that strike no matter what. At this point, I don't think so. So
yeah, I mean, like, I am much more inclined to buy Meta than I am Alphabet right now. I would buy them. I mean, Google's not the last out of big tech that I would buy. I think.
Let's play that game. What's the last one?
We can. Are we saying Mag
Let's
7
do
is big
first to
tech?
last. Yeah, let's do first to last.
I
won't throw in Tesla because that's kind of silly. So Tesla's not in there.
So first to last means number 1 or number 6?
First to last means the number 1 you'd buy, and then the last one that you buy. I gave you $100 million, but you're only allowed to buy those names. That's how silly this game is.
Give me $100 million. You just aren't never gonna see me again. I'm just gone. What are you buying? A yacht.
You're tied. You're tied to a post. A laptop's in your hand, and you have to buy 6 stocks. And afterwards, I take the laptop.
Dude, $100 million in a laptop. I will find someone to come and save me.
$100 million, laptop in hand. No, there's a guy with a laptop, completely loyal to me, and he will only take the only instructions he takes from you is what to buy. You're chained to a post, so you can't even move. You can't run away, and it's an uncharted location. And the moment this is all done, you get released back into the wild.
So we have Microsoft, we have Meta, we have Amazon, Google, NVIDIA.
I'll let NVIDIA go in there. Yeah.
You said big tech.
Tesla,
right?
no. Tesla, no.
So is it just those 5?
It's supposed to be 6. So I'm removing 1 from the 7. Apple.
Oh, I didn't say Apple. I'm an idiot.
Yeah.
Okay. Today, 1 Amazon, 2 Meta, 3 Microsoft, 4 Apple, 5 Google, 6 NVIDIA. I want to throw an asterisk. I don't have any semis at all. I don't touch semis. So do that with
Fair enough. What was number 1 again? It was what?
Amazon.
Okay, so let's talk about Amazon. I didn't put them on the title on purpose.
You did?
I didn't put them on the title on purpose. But they're in the thumbnail, so technically they're in there. So Amazon reported earnings too. How did you feel about those earnings? And that sell off.
So there was a couple things that were interesting. AWS reaccelerating or like continue accelerating their growth, which is very good.
Yeah.
operating margins continuing to improve, which is good. Unless you're some people who just like to circle numbers randomly and say not good.
I remember. Shout out to that.
Well, the thing was, they were looking quarter over quarter instead of year over year, because this is very much a company that has seasonal, like margins, especially seasonal.
Andrew, reading plus thinking is hard.
I know. Fun fact though, I don't mind listening to an individual. It's kind of like just listening to like an anchor on a show.
I listened to a guy that I actually put this in the timestamps, that we have a break to talk about stuff for 5 minutes. I give us 5 minutes to talk about my guilty pleasure. But he's your guilty pleasure, I guess.
No, I'd say less guilty pleasure, but like I honestly prefer, if I'm in the morning and I just want to say like what's going on in the markets, I'd rather listen to him over a CNBC or any of those things. Because all he does is say like, this is going up this much, this is going up this much, this is here. So I kind of get like, okay, so here's what the markets are doing today. Like sectors roughly are doing this. As I'm as I'm getting ready for work and stuff.
That's interesting.
Well, yeah, so there's that. But okay, so AWS very good. The weak part was probably advertising. The growth wasn't what we thought it'd be. I think growth was less than Meta's, which is a pretty rapid decel.
You know why that is, though, right? I can tell you immediately why I think that is.
Why?
So we know advertising is like a bidding process. And so what adverts would you see on a Meta platform that you would never see on Amazon? That's my riddle, my poor riddle.
Escort services.
You probably wouldn't.
It's political. I know it's political.
It's political ads.
You think it's that much of a difference?
I think it can be.
You don't think that within Amazon's DSP, they're selling customer data, and based on that data, they're getting served political ads?
Which one would you think would be paid a lot more, though?
Meta, probably.
Yeah.
Because Meta, they can see someone's on there like with a MAGA hat and a gun, and it's like, well, he's probably voting for Kamala.
Yeah, because I think the ad spend from both the campaigns, the super PACs, etc., from a federal, local, state level, it's all culminating in years like this. There's undoubtedly a benefit, and while Amazon is primarily going to be just commerce, it's commerce ads in terms of ads they sell, the data they sell.
I gotta think the data they sell, they make a lot of money on.
For sure, but clearly not as much.
No. Well, we'll see how that develops.
I think that they still have a shot. I remember they were never going to surpass Meta in advertising, at least for the foreseeable future. But they're right on target to surpass it by the time frame we gave on Meta of 2022.
By the way, I know if you like understand Amazon or if you don't, if you tell me like retail, Amazon retail makes no money, and then you turn around and glaze the ads business, I'm like, you're clearly an idiot. But
that person, yeah.
But I just I didn't think like the guide was that bad.
It wasn't.
I think Amazon is consumer discretionary. People see this like less than great guide and think consumer is really weakening. Do I want to hold Amazon into a downturn? I think that's kind of a silly thought process, but to me, that's what this feels like a bit. The other thing people might be thinking is, well, it doesn't matter because it can't go above 200 because Jeff Bezos just like set the ceiling for a bit. But have you seen that?
Yeah.
Have you seen that though? It's hilarious. It hits 200, then you see like Jeffrey P. Bezos, right? It's just like sold X amount of shares.
I wonder why they don't just, if he wants to spend money, just issue a dividend.
That's the other thing with this. This is the only big tech that doesn't return cash to shareholders. Why? They and I know you're going to say like, oh, they're putting expanding. They could do that and return cash, I'm sure.
Oh no, 100%. Yeah. Well, they don't even really do buybacks. They're not returning any cash to
Right.
shareholders,
That's what I'm
really.
saying.
Yeah. Which, for me, I'd prefer. I could go with either.
It doesn't just
Doesn't
showing
matter.
that you care about shareholders and you return capital. Like your own founders, like selling shares because there's no other way to monetize this.
Yeah.
Are they now? They're the only one without a buyback or not without a dividend too.
Yeah, because everyone else does. Yeah. Apple, Microsoft.
Mm-hmm.
Yeah, they all do. Meta. Jeez. Yeah. I always forget that Meta has a dividend.
Yeah,
It's
but
it's
what happens when Amazon institutes a dividend?
it moons clearly.
Duh. I'm so smart. I should join their management team and be like, institute a dividend.
Instant moon, get bonus, retire. Get stock bonus. 100 million, retire.
But like, that's the idea with all big tech was eventually it's like, okay, they will be able to return a shitload of capital to shareholders. And it's playing out for Google, even for Meta, for Microsoft, definitely for Apple. And then you get to Amazon, they're like, we just built another distribution center.
They still have investment runway.
Yeah. I mean, the crazy thing too is, to be fair, their top line revenue growth is quite impressive for.
Okay. I will say this though, to our point, they could institute what I call often a token dividend. A guy like Jeff
Yes.
owns so much of Amazon that if you institute a dividend, if I had to equate it to in terms of percentages for the current share price, like what would come out to essentially a, when I say token for the buyer now, it's not like you're going to live off of this, but for someone like Bezos, he's going to get quite a bit chunk of change in nominal terms. 0.5% dividend. There's plenty of companies out there where you have significant insider ownership from the CEO, and instead of selling their shares, they have this like token dividend that never grows, by the way. I can name a few off the top of my head, but
Even less than that. If you instituted per year 25-cent dividend for Amazon,
yep.
Jeff Bezos makes over 200 million a year.
But he's got to buy a yacht every year.
I mean, like
3 yachts.
So yeah,
every
so
year.
if you did a 0.5%, that's going to be like 75 cents, dude. That's like 500 million a year, 600 million a year.
Yeah.
Yeah.
No, must be nice. But I agree with that. So I wanted to name the other ones just in case, because people may will be like, wait, mention the other ones. So like Ingalls Markets, they've had the same dividend for a long time, token dividend. Pegasystems, might have heard of them, token dividend for like the longest time. So these are some of the examples that exist out there, and often you find the same thing: large insider ownership, some dividend that's been put in place, and you're like, why is this even being paid out, and why is it never growing? Well, it's literally just for the largest shareholder to fund their lifestyle, and they don't want to sell shares. Okay, so we have, let me see, because we have the break built in. I think we're hitting on it. All right, brain rot, intermission. This is the intermission. So, as you guys may or may not know, there is individual. I'll just refrain from using their name, but although many of you know who they are, these yield maxers, the people who just love their income. Today was not a good day for them, but it's going to get worse because they don't comprehend the unrecoverability of it all. So in days with extreme volatility, like we're seeing now, the ability for them to experience the same recovery as you or I or anyone else who just buys shares for themselves, they don't quite understand that. And so what some members are referring to is that individual who we did cover. Actually, fuck it, I'll say his name. I feel like it's like not something to hide. Let me pull up the picture very quickly because I feel like I have this prepared. Pushed it here. Okay, so here we go. And share this tab instead. So we'll share this real brief. What you guys see here before you is a man who has managed to underperform the market so terribly. By the way, he doesn't show the main page anymore. So if he listens to this, you should honestly show your main page for full transparency, which calculates your actual total return. This shows the unrealized return. But when we last covered it, he was down in one of the best years in the market's history. One of the best single years in the market's history was 2023. And he was down during that year while being long. All right. It's not that he was short, he was long. So today was his first. Well, he claims to be the first time he got margin called. You can see at the very top. We covered him in the past. And so you're kind of watching this person decide or choose poverty in real time. He's fully unaware. Maybe he is or isn't. It doesn't seem like he's actually aware of his situation. He's unaware of what he's done.
Okay, so he had an update to this. One, it ended up being down like a lot less today as the market recovered.
Yeah.
And the margin call went down to like $500. But his commentary is actually even more hilarious. He's like, oh yeah, like I wasn't going to pay this. I'm just going to roll the dice and see what happens. I'm like, that's his entire strategy, like in a nutshell. It's like that, and that's exactly how he said it. I'm going to roll the dice and just see what happens. And
I mean, this is incredible amounts of leverage.
Mm-hmm.
And he said he added more money to this over time. He's been down to this exact dollar figure before, so the losses have gotten exaggerated. I mean, this is now. Oh, it's not showing it on this image. Let me pull up.
I think does he not show his total like unrealized, like the total gain
only the
loss?
unrealized. He doesn't show the.
That's nice. Good for him.
That's nice. Good. All right, I got this one. Okay, so I see. Well, I mean, Andrew, down less. It's instead of 61. Sorry, yeah, that is like $7,000, I guess, but 61,900 was the image I showed before. 68,600 is where it is now. The day value change is down 7%. Yeah, so he only shows this now, but down $65,000. Let me make it larger. So
do you ever use Excel?
Yes, of course.
If you just put like an ABS function around his numbers, they look okay.
That was a
really nerdy
joke. You make me choke on my water. But yeah, this is man, I don't really understand. I don't understand why. I've got to overcomplicate it. So anyways, that covers, I think, the entire brain rot session. Back to our programming. All right. So the discussion that I have to ask you, or the topic we're going to have, and questions I have to ask you is the investment themes that you currently think are going to work really well over the next several years. And I think this is bringing some of the things to light. We don't have to talk about the names that we've talked about for the club members, but for the discussion at hand, as far as like on a high level, what are some of the things? What are some of the themes that we see play out, and then that kind of can guide the conversation?
So, are you saying what do I think is going to happen or could happen?
Yeah.
And how do you? Okay.
But themes like actually make money from it.
Sure. So my read of the future is that, okay, no matter what, we all think rates are going to go down. Yeah. We think rates will probably go down because there's weakness in the economy.
Yep.
if there's weakness in the economy, I'm going to see that as the consumer is hurting. That's where it's going to come from, right? It's not coming from government spending slowdown. It's not going to come from staple codes or something like that. Like, it's going to come from consumer weakening. So if you see a consumer weakening, you probably don't want to be in consumer discretionary names. In fact, if you're like me, you probably want to be short them. What you then want to do is say, okay, who wins as rates come down? Or who is not very much affected by the consumer weakening? You could look at companies tied to government spending. You could look at companies that are staples or utilities potentially. You could look at companies that are within themes that are kind of, the consumer doesn't matter to them. And so my idea would be go along those names and either stay away from or short discretionary companies. I don't know if that's kind of where you were thinking of going, but
that's exactly where I was thinking was going. So discretionary, like what? Give an example of a discretionary that you might want to avoid. I'm kind of trying to pull it out. I know the answer, but
or some kind of discretionary. I don't know if you're talking. So
would I want to be long travel?
I wouldn't. I don't think I wouldn't want to be long travel, entertainment, biotech. Yes, go all in on biotechs. That's what I meant to say.
VKTX is actually our favorite one. It's probably the guaranteed moneymaker out there right now. Honestly, you should go tell everyone about VKTX. Mm-hmm. Definitely biggest moneymaker potential by a huge margin. I've taken on a personal home line of equity to plow it into VKTX. So it's got like 4 drugs, phase 1. One of them skipped to phase 3. Sorry.
Biotech guys said it was good, so I was like, say no more, fam. And just went in. Actually, okay, we'll go to companies I don't like. And then one company that's reported today that would actually probably fit the theme of consumer not mattering. But, okay, so I don't like travel. I don't like anything that's overly leveraged either in this space, especially. If you're overly leveraged, you're set. It's just like a margin call.
I'll buy American Airlines then. The most leveraged airliner.
I mean, just buy Save. I mean,
look at this, Andrew. We should have played that. We should have played this idea. It would have been just like a good.
I think we played a better idea than this.
We did play a way better idea, but I'm saying
yeah.
Shorting Paul, like going against what Paul says.
The other, I'm sure there's other themes that you can find to fit into this, but yeah, I mean, airlines or travel. You could look at, because I'm trying to think things other than travel as well, because there's other discretionary things in there. I think auto manufacturers might do poorly.
I got a better one for you.
What?
Not auto. Recreational vehicles in Thor Industries.
Oh, Thor.
We haven't talked about this one, so
what's first the THO? How have they done?
So let's take a look. 5 days down 8%, but I think they've been flat. Okay, no, they peaked out right here in March. So this is yeah. Obviously peak to trough. That's not peak to trough. Peak to trough will be here, but that's 30% drawdown. Then it rallies a little bit, but yeah, this is discretionary as discretionary gets.
That's true. Oh, no, I got one. This is you want to see a shitco that I think is a good short? I'm not currently short.
Okay, good to disclose that.
It's 1W.
What's that? Just W?
1W. Like the
one?
Word. Yep, W.
One what? Oh, is this boats?
Yeah.
Oh, well. I mean, my goodness.
I could have jumped in. I was thinking about jumping in the other day after they reported like really bad numbers. They're leveraged too. Yeah.
Wow.
They could be
a 0, you said?
I think they could be a 0. We'll see. But that's an interesting one. But things like that, boats, recreational vehicles.
Would you say motorcycles?
Yeah, we're not going down that path though.
No.
We're not. We don't talk about that one. And no, actually, is Harley Davidson still public?
Yes, Hog. Yeah, HOG.
Yeah, they've done okay. I don't even know what they're like though. Like the company, how they're.
Look at this ugly chart. I mean, if you bought back here and you had the foresight somehow to sell here, you're a stock god. But like, what is this? Oh. So,
I mean, this is one too. Like, this is just an interesting company. They have to reinvent themselves a bit. Millennials and Gen Z, I don't think, care for Harleys. They're loud. They're annoying. I don't. So we'll see how that goes. But yeah. So I wouldn't want to be in those companies as the consumer is slowing down. You could. I don't know how like other countries or regions are doing, like Europe or Asia. You also look at companies in those areas that are exposed to the same thing. You could look at semiconductor plays that aren't exposed to AI data centers. It's a company that's gotten whacked? Corsair Gaming. That is very consumer. I think it would be shocked at the price.
$6.
And yeah, past month down. Yeah. I need to look at these. They might. We'll see how in trouble they are. Yeah, I know, right?
Oh my gosh.
What can I say? Jeremy knows how to pick them, even when he gets out of them.
Wow.
Let's see what their last earnings were.
Let's Polaris. Shorting this? Why? There's better.
Oh, dude, these guys.
We actually just had this discussion already earlier about why this is a misguided understanding of Amazon.
Dude, let me share my screen.
Yeah, go for it.
Look at the earnings for this company, man. So here's revenue. So cost of goods sold, revenue. First of all, look at the revenue decline.
Zoom in a little bit, just for the audience.
Can I zoom in? Does that work? Okay, it does work.
I guess
it does, right? Zooms in
a little bit. Yeah, that's good. Yeah, that's good.
I said okay. So first of all, revenue decline. Look at that last quarter. The consumer is dying. And then look at the then they have cost of goods sold, but look at the R&D is saying SG&A. So total operating expenses, operating income is negative. Then they have interest expense, interest investment income. So do have a little bit of leverage. Okay, nothing to see here. That's interesting. Never mind.
Well, yeah, we'll discuss this further.
We will discuss this further. Is the PE firm still holding a lot?
Yes, they can't sell until 2025, I think. Like there was an amount they couldn't sell until 2025.
Dude, how is these guys doing then? These guys got to be getting just killed. Dude,
they had a better balance sheet though. Like a way better balance sheet.
I thought they ruined it.
Oh, did they ruin it? Oh well, then that's their
They made an acquisition. I thought. Let's see.
You know, I've owned one Turtle Beach in my life. It was my first gaming headset ever. A long time ago now. Wow, that's crazy. PS3 was the console of the day.
Let's see how their financials are. Ticker, you're supposed to load this, please.
Yeah, ticker's making us look bad. It's like, oh, I'm not gonna load for you.
Yeah, see, they had a good balance sheet. Like they had at some point a lot of cash.
And no
Just kinda
debt, right?
Yeah, I don't know if they have debt now. Yeah,
They
long-term
have
debt.
debt.
They just took on debt.
What are they doing?
What are they doing? I have no idea. Cash flow
You're
statement.
probably right. Acquisition. Look at the goodwill line item. There's something there. Yep. Right there. Goodwill down there.
Yeah.
52.
How much did their income go up?
Well, how much did sales go up? Let's see if they're actually.
Their income went down. Well, year over year, it was like flat. The thing with these guys is like, I feel like they could get acquired at some point.
They could. I mean, I don't know why. Someone wonder why though, but they could. There's some. How do you feel about Match Group?
I'm
not
actually found this
interested
one
in
interesting.
Match Group, but
I want to see.
I'm not. But
I want to see if you can short these guys yet, or if I put some of them yet. This is just
there's
gonna
liquidity.
blow up. Yeah, it just went public. That's the issue. Just went public. This single.
What is this? NIP Group.
Okay. How much time do we have?
We have as much time as you can do.
So,
because
some people here might know about. Do you know who Ninjas in Pajamas are?
I'm uncultured. No.
Okay. So first of all, Ninjas in Pajamas they're an esport team. They're primarily known for Counter-Strike. They had a Dota team. It was okay. But Counter-Strike shooting games, it's what they're known for. Obviously, they didn't make any money, so they merged with a Chinese company called something or another. Doesn't matter. That Chinese company is owned by Mario Ho, who is the son of a mega billionaire in China who made a bunch of money making casinos. Stanley Ho. One of the richest families in Asia. So he decides, I'm going to make esports and take this on. So basically, Mario acquires NIP Group. They do a merger. NIP gets a bunch of shares. And they make a Chinese VIE. They use the NIP name, even though NIP is a very small part of the revenue because that appeals to the Western people. And IPO it. They make no money. They are valued right now. Their market cap is 870.
800 million.
Unless this is wrong. But I think there's been some dilution since it went public. So I think it's up to 800 million. I think it might be what it is. But they have you see this, and then I should be able to pull this up here. Maybe not. Yeah, they don't have it up yet. They just went public. But I don't want to take time to pull up. Yeah, I can do this real quick. Pull up their S1. I want to say that they have maybe 80 million in revenue, and their negative cash flow, negative income, should not be trading at that multiple of revenue. That's right there in F1. Where's their original F1? There we go.
What is up with there was this and Phase, right?
Mm-hmm.
That is part of a scam co now, so or was because they went bankrupt.
It's because there's no money there, but there's a brand, and then I think a lot of people like them, I guess, maybe. I don't know. So let's just go here. So this is numbers in thousands, so millions basically. So net revenue, this is year end December 31, 2022, 73 million. Cost revenue, 65 million. So like very bad margins. And then operating expenses, so they have an operating loss. So they come to negative net income. I don't think 2023 was much better. They should have it somewhere in here. Okay, and then they have 2023. So they went from 73 million to 83.5 million. Cost of revenue is still terrible, so very bad, gross profits. Actually, gross profits were less in 2023 off a higher revenue base. And more G&A. Part of this is probably because of the IPO, so it'll probably go down a little bit, but operating loss, cash flow loss. I mean, and this is a VIE. Remember that too.
Need I say more?
Yeah.
That's where you're at right now with this quick elevator pitch.
Yeah. So basically, the thing that's interesting, if you look at, I want to say this, net revenues. Let's see. Okay, so they're going public, right, as the Ninjas in Pajamas group. That combination didn't even happen until 2023. I don't know if they're using still the two groups together or not. I haven't gone that far enough down this rabbit hole. But if that's the case, then it means they added very little revenue. But basically, they have like a talent management. So like their big thing is they have like a talent management. So you're a pro gamer. I come to you and say, hey, I want a better contract or something. And they're like, oh, trust me, I'm your friendly Mario Ho. I'm going to help you out. And they negotiate a better contract for you. And then they do some event production. None of this is high margin, like, because you have to, obviously. So, yeah. And, yeah, Steven is right. Top tier. Streamers not cheap. Tournament winnings make the idea work, but that all has to work. And I feel like a lot of gaming companies have really pulled back on the amount of spend they're putting into esports now.
Yeah, because Fake Ailey said that the salaries are down 50 to 90%.
Yeah,
but they're still losing money
because so many orgs have just pulled back on the spend because that was a good free money era thing. So maybe this is like when rates go down and consumer discretionary finally recovers, then it's good. Corsair though, damn.
Corsair, there's Razer that's public.
Yeah, Razer is.
But Razer's a whole complicated. Like they're also an OEM.
Yeah, and also it's that's it. RAZFF.
And
they're very different because they actually make like.
Yeah, I like their laptops.
Yeah, I've actually heard good things about their laptops.
Yeah, they're like MacBook quality, but might be a good segue to Intel.
Yeah, let's do it.
So,
I'm gonna stop sharing.
Intel, you know what happened, right? So, audience knows what happened. It fell a lot. But why is the question. So after talking to a lot of the members who are a bit more knowledgeable than myself, and I say a bit actually as a lot, they know a lot more. There's some, let's call it, countering viewpoints on this, but for the most part, there were some members who were echoing a sort of distrust and concern for Pat Gelsinger, actually overtly calling him a liar about 6 or 7 months ago. Basically saying that they're making it sound, in summary, that Intel's the greatest company on the planet. Although I got to give it to Pat, he has to say that. So I want to be a little bit balanced with that. But also there were some other claims that were a bit exaggerated as far as their design front and how they were in terms of timeline for certain developments. And so they claimed that it was a lie. Fast forward till recently, when the earnings recently came out, pretty much a lot of those things that those members, club members, said were true, or at least the market thinks that they're true as well. On top of that, we had Intel slash the dividend, or actually, sorry, that's not the right way to say it. It's technically suspend the dividend. They suspended the dividend. There's currently no dividend paid out, and I didn't quite understand why they wanted to cut it at first, except maybe kind of get the pain out of the way from the flows, the outflows from ETFs. And then now it's not going to be as much, but it's still, I mean, it was a huge drop. You're at below book value now. I think book value is like $28 a share. And a lot of value investors who are already piling in are maybe debating piling in. At this point, there's also the famous Wall Street Bets guy who put his entire grandma's inheritance into Intel, I think the day before earnings. It was like $800,000.
$700, yeah. That whole thing, that, did we do that live? Did we go over that? Or was that on someone else's stream? Did we do it on the Two Accountants, One Gap?
Two Accountants, One Gap. Yes, we did on Two Accountants, One Gap.
Okay.
Intel CEO should have been fired long ago and very much overpaid. You see, okay, so this is another, this is another opinion that's being shared around. But yeah, no, it's been pretty crazy development, to say the least. I didn't even notice Carnival's at 1440.
Well, it's travel. I think we were right about the travel or consumer discretionary, and I think market has been reacting to that recently. The question is, like, is the sell-off done?
Dude, I made out like a bandit on those options. Whoever bought those calls for me, I'm so sorry.
Who the fuck is Jimmy?
Oh, Jimmy's Learn to Invest, I think, on YouTube.
Hi, I'm Jimmy.
Yes, that's him.
Oh, him. Okay.
Hi, I'm Jimmy.
Yeah.
And then one of his biggest positions was Intel. He had Intel, Disney. There were a few in there that have done well, but I think he got into Meta a little bit later. But yeah, Intel was a big one, and so now that's yeah.
Hey, I have not heard stuff from him in a long time. Did he like fall off or stop making videos, or is it just I don't get him in my algorithm?
Apparently, someone likes your impression, and also, okay, maybe I'm not that sorry for the person who bought my calls. Maybe I'm not that sorry.
But yeah. So with Intel, I feel like this has been a value trap and continues to be a value trap. Maybe he fell off like Intel. Jimmy. So with Intel, you're buying into a turnaround story, right? That's what Intel is. And you can't have a turnaround story and buy into it and not trust management. I feel like it's imperative, right?
Mm-hmm.
Like, the only turnaround is management gets fired. And like, it might be what has to happen for the stock, because no matter what Gelsinger does, and I know Gelsinger, I don't know what his pedigree was or what he did before, but he came in with a big, like, he was known for doing turnarounds at something. I don't know what.
He's also an engineer, and Intel had it garnered a reputation of putting people in the C-suite that weren't engineers. So him coming to the helm is probably maybe a little bit too late, because I got to give him some slack. Maybe he doesn't have to fib as much as he might be. And I say might because I don't want to claim or make that claim. I'm just explaining what I was told by people who know this a lot more than me. So how I understand it is that turning a ship like this around, he might have been given a really tough hand. and it takes a lot of time. One thing that I am very concerned, and anyone, without a high degree of understanding on semiconductor engineering can understand this at least, is, okay, if we accept the following, if Intel was just leapfrogged by AMD in one product cycle, that is really bad. Just one. What I mean by that is the next product that Intel has is not going to surpass the quality and performance of that of what AMD has to offer. Because usually it goes along the following. AMD releases a product, so it's number one for a little bit. Intel releases a product 6 months later. Now it's number one for a little bit.
Mm-hmm.
Then AMD, then Intel, then AMD, then Intel. And I'm just using 2 companies to keep it simple. You can throw in a bunch of other companies and a bunch of other places in semiconductors. This tends to be the case. It's very competitive. If there is a leapfrogging of sorts, this could be very bad. And so that's where the value trap narrative starts to really come into play. Because I'm not so certain that it would take all that long for market share to be deteriorated quite rapidly.
Wait, if you're quoting the Bible, you know it's bad?
Oh, you saw his tweet. Pull up his tweet.
Whose tweet?
Pat Gelsinger. Oh, you don't know? I thought you had it up.
No, I'm saying Stephen Marshall. No relation, I'm sure. But
no relation, I'm sure. Why'd you say it that way?
There's a relation. Oh no! He quoted Proverbs.
Hold up. Hold up.
Oh, and guess who's shitting? Oh no, it's Chamath actually just sucking him off. Okay.
Chamath sucking him off?
Chamath, yeah, I respect what he's done immensely. You're a key part of the. That's. Oh. Then he starts saying how he would fix Intel. Because I'm sure Chamath knows all about how to do semiconductors.
Sure.
Let your eyes look straight ahead. Fix your gaze directly before you. Give careful the thought to the pass of your feet and be steadfast in all your ways. Proverbs. Wait, so here's the thing. Does he do this often, or is it just like he pulled this out?
He pulled this out.
No. Maybe he does this a lot. Maybe he's just like a good Christian man. No, it looks like he quotes.
Okay, never mind.
No, he quotes once a week. Okay, to be fair, he quotes once a week.
Okay, then never mind.
It would be really funny if, like, after their earnings call or something, he did this one. Come to me, all you are weary and burdened, I will give you rest. It's like that's the opposite of what he gave us. For where 2 or 3 got, yeah. So. No, that is hilarious though. Like, you pull up the first thing.
It just looks bad.
It does look really
given.
Bad. Well, and I think people are paying attention now because, like, Chamath quoted here. For those who don't know, Chamath is just like, look at this. I like how he's like, I'm gonna give you like. And I like how he's like, he's not saying this to like Pat. He could reach out to him directly.
Saying it to them. Yeah,
he's just trying to, like, it's mental masturbation. It's like, look at me, I'm so smart. It's like, instead of steadfastly moving up the stack by creating more value by IP and working low margins, Intel seems to be moving down the market and becoming one. If, as a habit, Intel was also invented next time, there'd be plenty of vertically integrating competing. Many options of Intel slipping and becoming. Only to stop this is to use your balance sheet more aggressively by acquiring the IP that give you more run one. I wonder if he's like invested in some guys that could be acquired.
That would not surprise me with Chamath. Yeah. But now they talked about the CapEx coming down. And so this brought an interesting question because within the club, we have, a lot of spontaneous voice chats, and it's sort of to bounce ideas off of each other. And the question was brought up, okay, what about semiconductor equipment stocks? Because they were selling off. So something that was brought up that was interesting was the following, that Intel in their latest earnings report disclosed or discussed a reduction in projected CapEx over the next year or so. So if that's the case, then we might take a pause in terms of jumping in right away to a lot of the semiconductor equipment stocks. Also, given the following fact that for many of them, roughly 40% or more of earnings comes from one country. I'm going to let Andrew guess that country.
All their revenue,
40%,
right?
40% or more comes from one country that we don't like.
China.
Yeah, we don't like her. China. Yes.
China.
So that adds a little bit of complexity to the thesis.
Isn't that kind of like common for a lot of the
semiconductor equipment? Yes.
Yeah.
Equipment.
The thing I was
confused with Taiwan.
The Pat Gelsinger quote just reminded me of the Bill Hwang, God cares about fair value. That's one of my favorite quotes of all time. And I was trying to see if I could find the video. But you've seen that, right?
Yes. Yes.
Yeah. For those that don't know, I can't find the video, but basically Bill Hwang has a thing about how he's like, God cares about the stock market and he takes a Bible quote completely out of context. There's no context. He's like, see, so this proves that God cares about fair value. And so we need to find fair value of assets. So by being a hedge fund, I'm doing God's work.
Well, Kathy Wood, ARK Invest.
Oh,
she's the ARK. Come into the ARK. She can save you. She can save you.
Yeah, she had a dream that God told her to like start to save people, and
she can save you. Quick, run.
She can save you shorter, I guess. I don't know. Maybe that's what she meant. I'll just I'll make a fund and invest in bad codes and short me.
Run into the leveraged beta ARK.
Someone made a funny tweet. They were like, man, they've really failed at catching up beta, but dude, they sure work at downside beta.
Hey, but what you don't understand is that is a tax asset, an underappreciated asset. That's what she said.
It was so bad she deleted that tweet. That was bad.
Real quick. Oh, but it's saved forever on the internet. I just want to give one more bit of brain rot. One more before this is the last one of tonight. A brain rot, and it's one of my tweets shouting out my own Twitter. Okay, so context.
Oh,
very important context. Ross Gerber, Warren Buffett doesn't understand technology. That's for sure. Selling Apple before the AI revolution is an error for long-term investors. ... Apple. All right. There's a lot of videos that were deleted of Ross Gerber, and he's tried to do a really good job at making sure this content's deleted off the face of the earth because he said a lot of dumb shit. There was actually a Twitter account dedicated to predicting his moves because that's the difference in IQ between whoever runs that Twitter account and Ross Gerber. And this person said it.
It shows how predictable he is.
Because, okay, so fun fact about a cat. A house cat?
Yeah.
So house cat, do you know that their reaction time is leagues better than you or me?
But maybe you.
No. Way better than a human. Way better than a human.
I know
you're joking, but way better than a human. So there's a fun fact about the cat. So you can take this as an analogy of sorts. The cat, when you're playing with the cat, it's your cat. So you've played with your cat before. You can dodge a lot of their swats when they're trying to swat at you. But how come? How can the human even react in such a way? Because, and this is something that's interesting to think about, the human knows what the cat is going to do before the cat even knows what it's going to do it. So it's an example of where intellect is actually an overpowered evolutionary trait, and it can help us in something so small as playing with your cat and avoiding getting swatted by your cat and getting a little scratch. In the case of Ross Gerber and this guy, so the tweet that I'm remembering, it was hilarious. I died laughing.
Yeah,
So hard.
I know the exact one. Okay, go ahead.
The movie Top Gun comes out, and the guy tweets out, and the guy's done it before, by the way, with other stocks. So it's like this guy's already built up a little bit of a reputation harassing Ross Gerber. So movie Top Gun comes out, and he's like, movie Top Gun comes out. Ross Gerber's gonna go see this movie. And then he's going to buy Lockheed Martin next week. I kid you not. The following week, Ross Gerber buys the shares. So in this case, Ross Gerber is a house cat. And then the other, the Twitter guy, or the guy on Twitter, which I forget his name, he's like his owner. So he plays a lot with Ross Gerber. So he understands Ross Gerber. But that shows you a difference in their organs, so to speak, the brain. But anyways, so he has the audacity to say this, and there's that and more. I tweet out, or my tweet is commenting the following: posting this as a picture because he deletes tweets. He does. So you bought FUV. This company may not have heard of, and by the way, Meet Kevin also promoted this stock on his YouTube channel, and I believe it's bankrupt. We'll check if it's bankrupt or not, if it's even around.
It's
Archimoto. Okay, so how is it done? Absolute dog shit. There was also, I think it was PetSmart. There's a lot of other ones in Ross Gerber's portfolio that were just like, and he was super proud of it. The thing is, he got like one good one, and then the rest is kind of. And Andrew, you love this saying. What is a saying that you love, and you've been using it more recently with a lot of people? It's something versus something.
Performance versus outcome.
Yes, exactly. Yeah. And when you look at that, why is that important? Because it distinguishes when someone is lucky versus when someone has an actual process that can prove success over a period of time. Mm-hmm. So this is still not long enough, but I guarantee you it doesn't look good. So, and recall, my criticism is that someone like him, and we're almost done with the brain rot. My criticism to him is that how can Warren Buffett even leave your breath when this is what you have to show for it? So he doesn't. My point is, given his track record, I don't think he has even the right to have an opinion on anything Warren Buffett even does or looks at. Bullish, bearish, whatever. I couldn't think of a better example of a clown in the stock market today besides him.
He had like that little blip at the start, but outside of that, he's never been positive on his account or on his phone.
No,
it's pretty rough.
And I'm serious. If you're on any social media and you take him seriously, question that. I would not take him seriously at all.
The thing about him, I'll say this: I think he's a pretty charismatic person, and he speaks with conviction.
I don't think he's charismatic, but I get what you're saying. He speaks with
conviction.
He does speak with conviction. Yes.
Yeah.
Yes. When he believes something, he is like, "Oh yeah, I believe that." But he has some awful, arrogant takes that he comes off as just being arrogant, to me at least. And this was before this performance. I'm talking about interviews where he called someone like the most evil person on the planet. I'm not going to get into it, but I mean, it's political. It's political related, but he's insane. So it's like he lets his politics drive his investing, which is like, you're already kind of retarded, dude. I'm sorry.
I like Deck's comment. That's what he thought.
Which one?
Honestly, I thought Andrew's phrase was short this shit.
Yeah. That's one of the more newer phrases for sure.
Yeah.
I was referring to the more philosophical side of Andrew.
Not the more like All right.
No, Doc, if you're in the chat, your meme that you always post in the server. Oh, what is this? A new
Is this a
short.
short?
It's such a true. Oh, it's so true though. All right. Anyways, brain rot over. Back to our program.
Okay, someone asked about Lululemon. I would-
Lululemon.
So Lululemon's a great brand. I'd be a little concerned. One is like, what's the runway this company has? Like, how many yoga pants can you sell? But two, if consumer discretionary does bad, well, Lululemon's not. I mean, they won't escape that. I don't think. So, and outside of that, like, all I'll say is I have no insight into the female consumer, so I don't touch like these kind of things normally.
What Andrew is saying is he doesn't talk to women.
I don't.
Shout out Mrs. Andrew.
Mrs. Andrew.
But
FinTech boys asked about Dave.
oh,
Dave is actually a really interesting company if the consumer does bad, and they reported today.
Oh, please tell me they're down.
No, they
'Cause-
did good. They did really good.
No, they're down.
No, they're not.
They're down. I have them right
Whatever
here.
you're looking at is wrong. You're not looking at after hours, are you?
That's $35.
Oh, down from what?
No. I'm saying like they were down today, and then they're up in the. Well, this after hours is like weird. It's like the volume.
Yeah, but it's
too
based
low.
on earnings. I'm sure it'll be.
So yeah, Dave's really interesting. So I took a pause on Dave. I left it for a bit, but coming back to it, let's actually entertain the idea because this is one I've talked about publicly.
Okay. Let's go off this idea.
Yeah, let's go off this idea.
Weakening consumer, especially low-end consumer. We know for a fact low-end consumer is struggling. Low-end consumer is struggling. I think they turn. So Dave is a product. It's kind of like
There's one
imagine.
problem. It's not related to the business itself.
Okay, what's that?
No. It was a big deal. It was what?
Oh, the bank issue.
Yes.
But if they've already gotten through that and they have a good earnings report, and it looks like
I see
people
what you're
don't care.
saying. Okay. No. You're right.
So one of the things though, so what Dave is, the way that the very like shorthand, simple way is it's a nice person's payday lender. Like, is that a good way to, like, it's a bank. They also will front your paycheck, but they don't charge you insane interest rates that payday lenders do, right?
Yeah. Let me just.
That's not the actual picture, but it's better the actual picture.
It's not the actual picture. I'm kidding. I knew it was the actual one.
It's better the actual picture though.
Yeah, this is the actual one, and then the other one's what the community made as a meme that it is superior in every way. Where did I put it? Here it is. So there's the actual one from the company, Capital Mindset.
I like that one.
Actual Capital Mindset. You be the choice. Dave, by the way, if you're out there and you want this image or the rights to use this specific image, I have a very enthusiastic German who would love to give you the royalties to.
Mm-hmm.
So,
Ooh,
think on it. But yes, so Lululemon, we spoke about consumer, Becky. I think okay. So I want to talk about the positives of Lululemon because they've really pushed the envelope as far as retail fashion goes, athleisure, and I mean, if you actually ever looked at their margins, it's absolutely incredible the gross margins they're able to pull out of that company. Great management team. They had a recent blunder. It's hard to tell what proportion of the sell-off is due to the blunder versus broader market sentiment. One concern I have is exposure to China because I'm sorry, selling within China is just problematic for me due to capital control restrictions, being an outsized risk. It's like a gray rhino that I can't help but look at. But outside of that, North America, really dominant. Anecdotally, I go to a Lululemon and they're getting more and more attire for men. And again, the athleisure space. So if you're someone who goes to the office a lot, you go to the gym after the office, they make clothes for you specifically for that lifestyle, where you can look professional, but at the same time, then go work out and, not feel totally out of comfort. Or you could just change your clothes, but they also make great workout clothes too. They also make great, just kind of chilling clothes like, sweatpants, etc. Anyways, they are also recently getting into the footwear space. So, you have On-Ons, you have Deckers, which have Hokas. The company that I'm actually super interested in just like seeing their growth is On. I bought the On Clouds. I'm going to probably also go buy some Hokas at some point, and I'll let you guys know how I feel about them. But the On Clouds, Ons in general, I have 2 pairs, and great. They seem like a brand that can kind of navigate and get into different things too. So more competition from the likes of On. But Lululemon, I think, in the apparel space has done really well. So this is a really weird blunder. The recent thing about the yoga pants, what happened? It made women's butts look like flat
or
elongated.
Someone said it made their butts look long. I don't even know what that means. Like,
I don't actually know either.
yeah, I don't know if I want to search that. Lululemon long butts probably isn't the. But
well, we're getting a lot of questions. Wow, love it that the audience is kind of just throwing different tickers at. But we have Dave in front of us, so I wanted to just cover that with Lululemon because I feel like we didn't get into too much. But yeah, Lululemon, you buying it? Are you interested in buying it? At a price?
Consumer discretionary, Becky, especially right now. I don't know enough about the consumer base. I don't talk to women. So
except for one.
Yes. Yeah. And yes, I have one, soon two women. Although the one won't be really a woman, it'll be more like a child. But yeah.
Context.
Yeah. I'm gonna have a daughter in November. I guess without context that sounds really weird. Okay, sorry. Like I wasn't even going down that path, but now that okay.
It would have been better if I, as to make the joke better, just like cut your feed. FBI, open up. No, but okay. Also, congratulate everyone. Say congratulations to Andrew. That's like the Jeb Bush. What I just everyone clap.
Please clap.
Please clap.
But
okay, so yeah, Lululemon. You're not gonna buy your daughter Lululemon. That she'll just grow out of it.
Not when she's like.
They didn't even make baby clothes, so don't worry.
But so a couple of questions we got. One is Ulta, one is CCL, and Disney and Monster.
Oh, you got pricked up a little bit when you saw Monster. I know you. You're just like Monster, and Monster fits into a theme right now that might do really well. All right, so let's do Ulta first then. So Ulta, very quick. Whoa, that is shocking. I did not expect to see Ulta down to $300 a share. Wow, that is crazy. All right, so I've actually surveyed some women. I got a very valid opinion now of Ulta. But anyways, no seriousness. So Ulta versus Sephora, I think that's the showdown everyone really talks about. And Ulta has everything from the top brands to the lower end. So they call often drugstore brands. I think maybe now in the future they might not call them drugstore, but they call them right now drugstore brands. Sephora focuses mainly on the high end, and they have a lot of exclusivity to some lines. They are part of the larger parent company. Full disclosure, I am long LVMH, but they are part of LVMH's portfolio of brands. And so within Sephora, you'll get a higher end experience. You'll see the average ticket size is quite large relative to that of Ulta. If you don't want to take my word for it, go on YouTube right now, type in Ulta haul versus Sephora haul, and you'll get plenty of videos of girls going into Sephora and Ulta, and they'll say, I'm going to spend, $500 at Ulta or $500 at Sephora and see how much I can get. Or they just say, I'm going to go to Ulta and go to Sephora and then see how much I spent. And the general theme is at Ulta, you'll get a lot more, or you can get a lot more. At Sephora, you typically get a lot less for where your money goes because it's more expensive brands. So Ulta offers a lot of services. That's a big highlight for a lot of women out there. So myself, obviously not, but if you know a woman, you're married to a woman, you have a girlfriend, you have friends that are women, or you are a woman. If you are a woman, actually just chime into the chat. But if you're, know someone, just ask them, what are the differences? Typically, you'll get an answer of, of course, the brands, the general aesthetic of each store, the location strategy. So you'll typically see a Sephora, malls, other LVMH stores not too far from it. Ulta will try to get closer to where you live. So different strategy as far as that goes. Not that you won't see Ultas in other places. Ulta has a partnership with Target. And with the likes of Ulta, again, those services is something they really push. So you can get your hair done. You can get your makeup done at an Ulta. You can also get your makeup done at a Sephora. But I'm not sure about the hair thing. I should have asked about that, but I'm not sure about that one. And what else am I missing? You got something? Oh, I forgot. I didn't have this up. I had the Dave thing up. This is what I was shocked about. So when I was talking.
What did you forget to? Oh, the Ulta chart? Yeah.
Yes.
I mean,
shocked. I did not expect this. But anyways, also the difference in strategies as far as capital return. I mean, you have LVMH, which completely different. And Ulta Beauty over here is just buying up shares. They have a growth strategy for Mexico, which is going to be a franchise, not Target, but a franchise style. So they're not going to go in directly. They're using a partner that's supposed to know the market or understand the market a lot more than them. That's yet to be seen because growing internationally is hard. It just is. But if they hit it, oh my gosh, this thing's undervalued for sure. 100%. If they hit it, undervalued.
If they hit it for sure. But like, yeah, that's pretty.
Would you buy it is the question.
Okay. One of the things about investing is you need to stay in your lane. The market is big enough that you can find attractive investments in something you have some expertise in. As it has already been painfully explained to me several times, I don't talk to women. So why would I?
Ask your wife if she's been to Ulta once. If she says yes, buy it.
I should listen to my wife. She tried Olaplex once and said it was terrible.
Tomorrow or tonight. Ask your wife.
So actually, I have a story about that. She literally, and I should have turned on shorted at this point. She tried it and she felt like it ruined her hair with Olaplex.
Lord.
Well, I mean, look, apparently lawsuits came out. Apparently that's what is Olaplex at right now?
OLPX.
$185. I'm sure they do a reverse split at some point.
To answer this question on Sephora, yes. All the ones that I know of are standalone. And they're usually in nice areas.
Yeah. Okay, so do you want to do... I feel like we talked about kind of Carnival Cruise. We wouldn't buy it because I am not bullish on the consumer right now.
I had a play, but that's it. Yeah.
Yeah. And so I think that the issue with Carnival is that the consumer is weakening, and they will keep travel. Like, I think travel won't get hit as hard potentially as some other things, but I still think it gets hit. What are the other ones? Elf
had a 13.8% intraday move, by the way.
Dang. They do that a lot, don't they?
Yeah, but this time it was like,
they did it on earnings too, though, didn't they?
Yes.
So we have that. We have. I don't have any opinion. Elf falls into beauty. It falls. We're just asking a lot of things that are outside my circle. Okay. I will say this. Be aware. I was psychologically long this company. It looked good at the start, and it did not look good afterwards. Because I was probably psychologically long right before that first pop there, maybe right after it. Because I was like, I don't buy beauty. I don't buy women, any kind of Becky stocks. Becky is like women, the Celsius, the Lululemon pants, Elf Beauty, Ulta. So I don't know where it goes from here.
I think entertaining that, something that goes in favor of companies like Ulta and Elf is that in a market downturn, what I'm referring to as recession, Elf has a lot of opportunity to take share, in theory, because they are perceived as, and they are, the lower price but decent quality at that price, or the best quality at that price. They're not the super high end with the best ingredients possible, but they're at that price point where they're very, 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 very competitive. So when you see them at the drugstore, the perception of the brand, which I think is true, tends to be kind of geared towards, okay, I could buy something that's $1 cheaper, or I could buy Elf, or maybe $4 for the foundation, or $8 for the Elf foundation, or $7, whatever it is. I'll pay up for that knowing I'm getting decent quality still. So yeah, when you go to a Walgreens, when you go to CVS, when you go to an Ulta, you'll probably buy an Elf. Sephora maybe still will always do business because of that aspirational customer that wants the higher end makeup. Because what I noticed this too is that women tend to not obviously buy only one brand. They mix and match. They might have multiple foundations from different brands, multiple eyeliners. Maybe they have one of something, but with other things, they mix and match. And then if you get into like the enthusiast category, they have everything. Like they're the ones when you go into their room and you just see like the complete massive setup. And it looks like they have potions and concoctions and stuff. And they know each one by like heart too. It's like they're like, oh, this one's for this. So it's like, how do you know? It's like there's not even a label on it. They would all memorize.
Like we have a brain for this stuff.
Yep.
It's exactly. We have stock portfolios. They have makeup portfolios. It's just
very strong. All right, let's move away from these because.
Okay, so we'll go like completely opposite direction. If Trump gets elected, he's going to start opening up oil reserves and start drilling immediately. How would that affect oil companies? More competition.
It would only matter if in aggregate the supply of oil increases more quickly than the demand for oil. So it's unpredictable because at the end of the day, you're going to have to know what the other parties around the world are going to do. Because what if they cut and, hypothetically, the Trump goes and says, oh, yeah, drill more. So, oh, yeah, drill more. But then other parties around the world, they slow down drilling, keep the price elevated. Maybe not. Maybe they accelerate drilling because they want to, which they have done in the past, to harm U.S. drilling, to lower the price of oil, then everyone's going to be like, oh, great. I remember there was a time where gas was so cheap, and oh my gosh, I had a buddy of mine with a gas guzzler, and he was just like, gas is cheap, bro. I'm good driving everywhere.
Well,
it was like $2 a gallon, something like that.
the other thing is, did oil drilling, did the government's stance on it change that much between
It's not about,
administrations?
it's not even about actual policy sometimes. It's sentiment
Mhm.
driven.
That's true.
So
That's true.
that was actually the rationale. I mean, I made videos about this in the past about the oil
Mhm.
trade of 2020.
Right.
And I described why I bought what I bought and the rationale behind it. But the thought was the Biden administration did not have to actually pass any laws necessarily. They just had to make oil executives feel as though they couldn't reliably invest in new projects under
Mhm.
the threat that something could happen. Well, that's exactly actually what happened, by the way. By just listening to, and then when the administration complained overtly and said they're just not drilling, the Occidental CEO, I think she was very outspoken and said that they there's no reason they don't want to invest in any new projects. This was before they did the recent acquisition, so it looks like
Mhm.
they changed their mind perhaps, but this was back in the day when the Biden administration was complaining.
Right.
So it's not about actual legislation has to be passed, just the narrative. And if the narrative is X, whether we like it or not, that's the narrative, and that will drive forward investment decisions.
No, I mean,
You got a
you can narrative trade it. I don't think it. I don't know if it fundamentally changes the businesses, but you can narrative trade it for sure.
Yeah.
How does oil prices affect the ticker Musa? It's complicated, kind of. So Musa's operating. I am still long Musa. Full disclosure. Musa's business model, right? So they have a better cents per gallon CPG margin than most other gas stations. Their in-store sales aren't doing that great. In fact, on their earnings call, which I listened to, cigarettes did great. Cigarettes did amazing. Gas did great. Gas did amazing. Discretionary items in the gas station did absolutely horrible. So just do with that what you will. But so the way it works for a gas station is as the price of gas goes up, their cents per gallon, it goes down a little bit, or price of oil goes up because there's a dynamic. There's a book, I think Fabio knows this better than me, but I think it's called Up Like a Rocket, Down Like a Feather.
Yeah, rockets up, feathers down.
Rockets up, feathers down. And so what it means is if crude oil goes tomorrow from 74, which I think it's roughly at today, to 80, you will see gas prices react like that. They will be up to, in my area, I think they're at like $3 a gallon right now. They'll be up to $3.20 tomorrow, $3.30. However, if gas prices go from 74 down to 70, or oil goes down from 74 to 70 tomorrow, you're not going to see any real change. It's just they'll slowly kind of come down, right? So for Musa, when the oil prices go up in that upward trajectory, their cents per gallon margin's a little bit lower. But then as it comes down, then it becomes like they make a lot more in that coming down motion. So what Musa now, obviously, I guess full disclaimer, they do incrementally make a little bit more money. Like if gas went back to 120 a barrel, if oil did, I can't even say gas. If oil went to 120 a barrel, yeah, they make more money. But what's really good for Musa is volatility within the oil markets. So if oil shoots up to 85, comes back down to 70, shoots up to 85, that's really good for them.
Yeah, very good.
So that's the kind of environment you want if you're a Musa holder. At the end of the day, I feel like you hold the company because they have proven that they have really good cents per gallon margins. It's a staple. They're buying back shares. But that's kind of the dynamic there.
Furthermore, one of the discussions we had earlier this year, remember the discussion about buying into Musa on any drawdown? We got one drawdown on that one earnings.
Mm-hmm.
And the rationale was, if the consumer is getting squeezed and they start shopping at the pump, well, guess who's going to have higher visits at their stores? Musa. So if you currently hold Musa, which we get this question all the time, if you're a currently holder of Musa, which I think, Andrew, you're currently holding Musa.
Yes.
Don't sell if you think recession's on the horizon. In fact, they should, in theory, do quite well, especially if consumers continue to get squeezed. Because now, okay, when you're completely secure at your job, you're making good money, you're like, yeah, I'll stop at this gas station. But when things are getting a little tighter, you go, I'll find a Murphy's.
You might be like, Murphy's is near. It's not in the best part of town. I'm going to go over to the Circle K in the nicer area, or the whatever it is. And then this one, you're like, I'll go to Murphy's. But
yeah,
to kind of illustrate the point, markets have been down 5% last week. Murphy's was up 1.5% in that time. So the market thinks that this is, if there's a recession fear or anything like that, that's a good place to hide. So I think, even though, like, compared to historical multiples, or like, I guess 2022 multiples, it doesn't even look that bad on historical. It looks a little high. I still think it's a really solid hold here. And it goes back to my thought of be short consumer discretionary or stay away from it. Long staples, long utilities, what? It's true though, dude. I mean, hey, you don't get that cheaper gas for nothing, okay?
Actually, I went to Murphy's one time, and I kid you not, yeah, it was at nighttime, and I was approached by a homeless person.
That doesn't surprise me.
But from the back though, like I was like,
yeah, no, that does not surprise me at all.
The poor person was like ununderstandable, but they were, I think they were on something at the time of our meeting. And meeting as if we planned. I'll meet you there. No, but when I met this individual, couldn't understand them, and they were saying something about something, and they just said something, and then they just continued walking. They were definitely on something. But yeah, it was kind of funny. It was at a Murphy's.
Dude, I have so many homeless person experiences we could share. I've had, like, there's some funny ones, but like one time the person just like walks by, they're like, "What are you doing?" Like, what? They're like, "If you're not helping, you're part of the problem." I was like, "Oh," and they just kept on walking. It's like, okay, well, I mean, to be fair, that's kind of true. But so there's additional questions. One person says, "Any thoughts on Japanese companies or EWJ?"
Companies I'd like to own that seem to have really good assets. There's probably 3 off the top of my head. There's other ones, but they're so complicated. They look really nice, but they're really complicated. And I'm gonna stick to mega cap because I'm boring. So Nintendo, for funny reasons, because they're the only company that I know of that can consistently fuck their customers, and the customers keep coming back, like, consistently.
Yeah.
And so the customer is just like, they want something. Nintendo knows they want that thing. They just never give it to them. They give them something they almost want, but it's not really right there where they want it. And then, of course, the deed happens, and the customer's like battered, bruised, and then, but the customer, you think, gets up and goes, screw this, I'm going to this other, company. I'm going to buy my games from them. And then no, they get up and go again, and Nintendo's like, what? And then they're like, did I stutter?
Like,
again?
Now they pull up the Britney Spears, "Hit Me, Baby, One More Time." Like, what?
To the point where Nintendo's kind of like backing away. It's like, you're weird, bro. Get out of here.
But it works.
They
I
have the
mean,
greatest customer base by far. It's insane. There's
mhm.
fine. Where are these Sony fanatics?
Well, what's like Sony's big IP anyways? I mean, yeah, I agree.
There's no Sony fanatics. Nintendo fanatics? Oh, go to a Comic-Con convention. There's fanatics. I mean, they have some of like the games with the largest fanatical fan base, like Zelda. Well, I'm not saying it doesn't deserve it, but I'm saying pointing it out. But yeah, it's absolutely crazy. And it's like they get away with releasing nearly the same game every single year, but it's like not, a sport game like FIFA. It's basically the same game, just like replastered. They sell it again and again. So you want to own that. Don't fight it. Don't hate on it. I'm not hating on it. I'm saying it is what it is. I can fight it, or I can just accept. I choose to accept. So that one's an interesting company.
So you said you have 3.
3. I'll say the one that, no one, everyone's gonna be like, oh, that one. Toyota. Just because I think, by the way, great book to read, The Toyota Way. Great book.
I'm just trying to think what would be the third then? Is the third an obvious company?
It's a big mega cap from Japan. They're a conglomerate. They own a lot of different things. I mentioned their name by accident already.
Oh, Sony?
Sony, yeah.
Okay. Because they do own stuff like Crunchyroll. I heard that Mitsubishi is trading at like 3 times forward earnings, but
that's one of the ones that's super complicated. That's one I was referring to. One of the ones I was referring to as being too complicated to evaluate. Nintendo, you can get behind it.
Would you ever buy SoftBank? No.
No, not now.
Yeah.
Way back when, different story. Today, I think it's too big. He's blundered a bit too many times. No,
because it sold off a lot.
Yeah, it's not
it's
for me.
Down 35% in the past 3 weeks.
I'd get my grubby little hands all over Mitsubishi before I go on SoftBank.
Yeah, Mitsubishi though is complex.
Complex.
Their financial arm is separate from their you have to
Sony is still complex, but not as much. Toyota is a lot less complex, but like within the realm of Japan. Nintendo is probably the simplest. Sony has a lot of complexity because they have a lot of different business lines. I would separate the media and gaming into one. And then from there, they have a really good media, includes Sony Music, video games, which, they have the PSN. So you subscribe for PSN access and all the games that come under there, all the video games that they produce and sell. Then additionally, Sony has the cameras business. So the actual equipment. They also have, I forgot to mention like Crunchyroll that you already mentioned, largest anime distributor in the world. That they bought that from Warner Brothers, by the way.
Did they really?
Warner Brothers owned that.
Well, depends on what they sold it for, right?
Sold it for a good amount, but I think it was under AT&T, by the way, so it's not Warner Brothers' fault.
Right.
I think they probably would have wanted to keep that. But, actually, I delved very briefly into like the anime business because that's another type of media that has fanaticism behind it.
It does.
So I was like thinking, it has a lot of fanaticism, might be interesting to explore it. What I kind of came out of it was kind of the understanding that there's not a lot of money in the actual distribution of it.
Oh, really?
No, it's tough. It's very decentralized. All the studios are a lot of independent studios mixed in there. But that gives you a bit of an advantage from the distributor side because you can go to the lesser known studios and get their anime in front of a lot of people, which they obviously want. But once they're big, it's not like in-house. So there was a push to do a lot of in-house, but That's like it's a mixed take. It's a very independent and artistic style of media. So a lot of these guys, like, they want to be their own thing. They don't want to become part of the conglomerate, so to speak. So Netflix has been doing their own anime, but you can't really consider it anime, I think.
I know I'm a terrible person. When I talk about Sony and Nintendo and stuff, my short brain starts to go off. You know what? And not for those companies. You know what company it reminds me of, though? That was an absolute shit call. I never shorted or anything because it's a gaming company. Was Skills?
Gambling, gaming, yeah.
Yeah, they're like you. What was their thing? It was like you be the pro or something like that, or you.
I think you could gamble on outcome of games, no? Or am I misremembering?
You bet like on your own game. So you just bet like, oh, I think like my, I think you'd like gamble on your own game, yeah.
Oh, Andrew, this was an $800 stock at one point.
Sure it was, man.
That's how many splits it had.
I remember when people were buying it. Yeah, well, I mean, because I remember people were buying this, and I was like, why would you buy this? You know who bought this was UK Jeremy.
He bought a few. Let me show you another one. Do you know about it? It's a British company, actually.
Oh, is it a clothes company?
Is it what?
Clothing company?
No. ASOS PLC. I think he also bought maybe. No. This one's actually just got taken out.
Uh-huh.
Okay, don't worry. Most people don't know this company at all.
GAN. Oh yeah, nope. I knew it's a gambling one, right?
It's a gambling one.
Oh, I didn't know that he bought this.
Oh yeah.
He also bought Boohoo or Boo. That's what I was thinking of.
He also bought this.
You know that he like he has like a thing like every month or like every couple months where he compares how he's doing to Jeremy.
You're joking.
Yeah, he does.
No,
I'm serious.
Wait, I'll pull this up. That's too funny.
No, I'm serious.
That's his barometer.
I'll pull up for you. And I don't want to spend too much time on this. This is like a quick. There's actually one stock. Yeah. Last one was 3 weeks ago. JKR versus financial education. But like, we don't need to watch it. Yeah, that's his barometer. And he does it like every so often.
Fake alias for your question. That wasn't me. That was FuHap, but I'll take a look at it. I mean, in crisis, there's opportunities, although the crisis seems to be abided. Looks like with the Nikkei rallying. I'm using the Nikkei, even though I despise using it.
Another question. Would storage REITs do well if there is a recession, i.e. NSA?
No.
I agree. They wouldn't.
Terrible.
Yeah. I think they would actually get smacked.
Sun Communities, though.
Did he mean?
Agree Realty. Oh, he accidentally closed his browser. So, while we wait for Andrew to come back, or was he taken out by the authorities at Google? That's a mystery for you guys to determine. So, the tattoo chef is in buying territory? Yeah, probably. Oh, we have regained.
Yeah. So I'll never talk bad about storage REITs again. But no, Sun Communities SUI, I think, is a good REIT to have in that situation. I don't know. The other one I like is PSTL. That's one I think will do very well in the recession.
With guaranteed rents? Yep.
Yeah. It's basically a REIT for the Postal Service.
Look at this. This is insane. It's not that much of a move, but like for this stock it is. And then it just gave up half of it.
Yeah, so the thing is the flip side of that is that you don't have a lot of pricing power on your tenants. Right? I'm assuming that's the flip side.
Yeah. No, when you're dealing with government rentals, they strong arm you. But typically how it works is, but there's a difference actually. I forgot to mention this. They actually flip the coin, and I found this very interesting. So when you normally dealing with the government and you're forming a lease with the government, you have a property and you have, okay, I could go to a private tenant and I could get potentially better terms, but lower credit rating. So you have, I know there was some guy a long time ago who was like, oh no, that's only for publicly traded companies. It's like, no, REITs also refer to their tenants as investment grade or not. So you can go for the creme de la creme of investment grade government, or you can go for, take a little bit more risk, more return. A general thought process. The government, you'll typically have a higher upfront rent, but way lower growth in that rent. And they'll sign a long lease. Like they'll typically sign long leases. On the private sector, you have a lot of mixing and matching. It really can depend. But for the postal, what if I told you the average is 5 years?
Average what?
Rental renewal.
For postal?
Yes. Oh, yes, Andrew. That's what makes this. I was a little bit more interested when I found that out.
I mean, it makes sense because it's government. But
no. Typically, they're really long. Government's very infamous for signing 10 to 15.
I thought 5 was like a fairly decent amount of time for a tenant.
No,
that's pretty average.
Yeah,
I mean, like, because if you're comparing it like the MGM or like those guys, maybe, but
those are
like
an exception.
Infinite. But okay, so because if you do every 5 years, then you can have more pricing power.
Yes, which makes it interesting. Now, there are some parts about their business that feel like they could do better at capital allocation wise. But who am I to know, honestly, because I'm not in their shoes. So like I could probably fuck it up horrendously if I was in their shoes. So
yeah,
the guys have experience for sure. So Occam's razor, there's probably something that I'm overlooking and my criticism is invalid.
Yeah, I don't know. I feel like the other thing too is like where do they go from here? Do they get more postal services?
More?
Like, what do they?
Oh, though, there's a lot. You should see their slide. There's a slide where they break down how much is out there. And it's not just the postal where you go to drop off your mail. It's also the warehouses.
Yeah.
So there's so much of that.
The warehouses are pretty large. And I just always wonder, like, one thing that doesn't make sense to me, and I guess it's like a relatively small industry. Why is the government doing this?
I'm dead. Which one of you is this?
Oh, man.
You guys are hilarious. Did you get to talk about Monster and our free money stock Celsius?
Monster will do I think they'll do pretty well in the recession. I think their consumer is more loyal. It's more of a staple. We'll see if that's true. Becky's a little more fickle than Kyle. Kyle is the construction worker who gets up every day, says, hell yeah, brother, pounds of Monster, and gets to building America. And Becky is the wife or girlfriend that he works for. It's like my hands look like this. My hands look like this, so hers can look like this. It's like that's Kyle and Becky. Do you know that meme?
Yes.
Yeah, that's the relationship. So Monster people are very loyal. And I think the other thing too that people don't realize about Monster is almost all of the energy brands that guys drink are Monster, outside of Ghost and like some guys drink Celsius, but outside of Red Bull and Ghost, is there any?
I'll tell you something silly about Ghost.
What?
I think Ghost's branding, I'm not entirely certain if it's like too childish.
So Ghost
shouldn't be an issue really, but remember, can design, there's a people who are paid a lot of money to just think about the design of the can. There's reasons for it.
So Ghost is like kind of weird. It started as like a pre-workout and like kind of a gamer drink. And so it was designed for like gamers and pre-workouts, which is like kind of weird, if I remember correctly. At least that's when I got into it, what it was. Yeah, I don't know. I don't know if it's too childish. I don't know if people really care. Maybe they do. We'll see if this is an AmBev, so we'll see if AmBev can do something with it. But outside of those, I mean, Monster owns Monster. They own Reign. They own Bang. They own Full Throttle. They own NOS, which are kind of like like kind of dead brands, anyways. But what are the other ones? They own a bunch of like international stuff. The other thing about them is they're growing really quickly internationally. Burn and Predator, I think they own. But like the simple thesis with Monster is, one is they've already sold off a lot, like on a multiple basis. And that was like from earlier this year. And then one of the things too, and actually Fake Alias is saying this, Monster Management has said they'll have a price hike this year. And that the price hike will not impact, in the US, the price hike won't impact sales, I don't think. And they're usually pretty accurate on that. So like you're going into it, like, and people are asking, like, do you really think I've seen a couple comments, do you really think there's going to be a recession? Or do you think you're overthinking it? I guess like I have to like answer that with, I feel like you and I have done fairly well the last few years. If you're looking at this, the one thing that you want to make sure you do is preserve capital. So like what I think is, what's the risk return on these plays? And so like if the consumer doesn't go into recession, it's not like Monster is going to go down. It'll still go up, just not as much. Same thing with a lot of these Musa, things like that. They'll still go up, maybe just not as much. And so like it's a risk reward question. And I think Monster sets up very well in that risk reward framework. Consumer discretionary codes don't. Leveraged codes don't. Shitco shopping doesn't. So like find some good, like I guess it's kind of like, and it's not 1000% based on macro. So I have some companies that maybe people would think like, maybe it does good in the next cycle if what I think is going to happen happens. Maybe it doesn't, but I've been holding it for a while. It's a long-term investment. I just hold it. I think it's a great company and they'll do what they do. I think they could still do very well in this environment, but we'll see. Another set of companies, by the way, I think would get really hurt in a downturn, in a recession. And I'm surprised by their price action recently. And the management commentary and the guidance has indicated I'm right. I think HCMs get crushed in a recession. So HCMs, human client or human capital management. So you have ADP, who's like the king. They'll do fine. You have Paycom. You have Paychex. You have Paylocity. You have Paycor. You have, who else? Is the one stock, is the ticker just Pay? It might be Paymentus. Yeah. So I think these guys are also, they run one of them. But so you have these companies, and if you think about what they do, so I get paid by however many employees you have usually. Workday is one too. Workday is weird though to me. I've never understood the Workday. Everyone hates applying on Workday. It's a pain in the ass. They're not a full suite solution. Like they're just annoying. But you're correct, Julius. But the thought is you have a recession, so you have less seats, so you lose revenue from that. Also, one of the things that HCMs make money on is the float. So they make money on when you pay them before they send the tax money to the government or before they send money to your employees, they take that float, they get some interest income off of it, and it's a material amount. And then they, just get to pocket that, which basically flows to the bottom line. The thing about that is that there's very little, it's very high margin, that if the recession happens, rates drop in an instant, and they're going to be very rate sensitive in terms of the interest income they get. But then secondly, they're going to lose that top line income. So I think Paylocity reported, and I think Jesse told me they guided to 8% revenue growth for the year, for the upcoming fiscal year, which management just a year ago said they're going to have 20% top line growth CAGR for the next 3 or 4 years, which would imply. But McBuda T jokingly did explain to me that this is actually bullish. It means that they're going to have a lot of revenue growth in the remaining year. So let me pull up the report here. Full year highlights. Okay, business outlook full year. Recurring and other revenue is expected to be in the range of about 10.2% growth. Total revenue be in the range approximately 8.3% growth. That's not good. Paycom, I wouldn't be surprised to be. Paycom's been the slower, lower revenue growth. Paycom just hasn't given. They haven't wrapped up their fiscal year yet, I don't think, so they haven't given that guidance yet. I wouldn't be surprised to see them do something similar. The really weird thing to me was Paylocity popped on that earnings report. So maybe there's something I'm missing. Maybe a lot more bearishness was priced in than I thought. Yeah, but Paycom's not going to give next year financial guidance for a while. But yeah, so
these are an avoid for you, but. Yeah, so it's not about timing a recession or anything like that. It's about positioning. I like how you described it. It's entirely what it is. Different opportunities provide different risk rewards, and different scenarios are where they play out amazingly or okay.
Right.
So I'd say Monster gives you no recession, pretty good. Recession, pretty good.
Right. Recession, it's okay, you probably outperform and can then reallocate capital, or you do well. Exactly.
BTI.
I think BTI falls in that same space. I think it's a decent risk reward.
BTI up until today was killing it.
BTI is solid.
Yeah. Super cheap. I wish they would just buy back shares though, but
I think I'll answer at least one more question just because I love this individual. And that's Boba's question on Microsoft or Crowd. And I don't, because he said I only have money for one cybersecurity. He said secure security, but I think he meant cybersecurity.
He asked earlier about Palo Alto.
I was going to say, out of the options right now, I think Palo Alto is the best option. Microsoft isn't really a pure play. It's a conglomerate at this point, It's not really a pure play. I still think Crowd sold off a lot. You could get an earnings report. You could get another 2 lawsuits. Who knows what happens? What's Crowd priced at now? So it's at 222 valuation. Okay, so I'm just going to compare on a quick check on sell-side analyst estimates, what they come in at compared to, and I don't know if sell-side's counting in much slowdown in ARR. The Palo Alto is still significantly cheaper than CrowdStrike after this.
Yeah.
I think you're going to have the opportunity now. CrowdStrike might pop 20%. You'd have the opportunity to play in Palo Alto, and if CrowdStrike comes out and says it was a one-time thing, our people understand that, our clients understand that we're the best, and you want to get into that best of breed, you can maybe go in then, which would actually speak even more to CrowdStrike's reputation and performance, honestly. So you could do that. I think that's how I would approach this. I don't have CrowdStrike. I don't have Palo Alto. I had CrowdStrike and I sold up on that news. There's a video where we went through it. I think it was the Monday after the Friday I sold it.
Mm-hmm. Yeah.
I just don't think Microsoft is a pure play on cyber. So if you're looking for that exposure, I wouldn't go Microsoft.
I've been admittedly buying some Palo Alto though.
No, I don't have any issue with that. I just have been buying other things.
There's, well, on this week's ICOM, I want to talk to you about one of them that I bought more of today. The email alerts. Yeah, the email alerts every day.
Oh, are you getting bowled up?
I'm bowled up. Yeah.
I bought more today too.
I think I might have moved it.
Oh, yeah, but we don't need to get into like this crypticness, but like if you did it the way I did it, you could not move it. But I don't think. Maybe you could.
There was there was another question, I think. I'm trying to remember it at this point. If I don't remember it, feel free, anyone, ask one last minute question.
Disney.
That's the one. They reported today. Or is it tomorrow? I think it's tomorrow.
Tomorrow?
Yeah. Let me look this up. All right. Upcoming August 7th. Tomorrow for today. So Wednesday. Disney, do you want to own this on a weakening consumer?
I don't think so. I think I wouldn't.
This is another company like Google we talked about earlier. Wonderful assets. Management does not understand how to monetize them properly. They're leaving a lot of money on the table. A lot of money on the table. So like the Star Wars fandom, for example, is kind of like the Nintendo fandom, where you beat them down, and then not all of them, but a good chunk of them get back up. You know, they like wipe the blood off their mouth, and they're like, again. And then, but unlike the Nintendo fan, they probably have like 5 hits.
Here's the thing I'll just add. We are not omniscient. We think the consumer is weakening. I think the consumer is weakening. If you have a contrary, the market has priced these in to think the consumer is weakening. It's not fully convinced that the consumer is struggling, but they have priced that in. If it's
not
right, if you think that narrative is wrong, then and you think the consumer is fine, you think the consumer will spend money at Disney, it's a buy.
That's true. That's very true. So I guess that's something that homework for everyone is figure out if you have an opinion on, is the consumer weakening? If so, execute plan A. If not, execute plan B.
And once again, process over outcome. Monitor what you're doing. You better have some things to figure out, hey, how will I know if what I think's happening is right or wrong? And if this isn't like, a company where you're like, I just think the company is like the company Fabio was referencing earlier, I will hold through whatever economic environment until my thesis is broken. But with some companies, you don't. So you have to be able to say, okay, was the thesis right? Yes. Okay, hold. Is the thesis right in getting to the end of the thesis? Okay, what do I do? Is the thesis wrong? Okay, what do I do? You need to have a process to be able to measure that and kind of, I guess, say these are the things I'm looking for and this is how I'm going to shift. Because the other thing that could happen too is we could be right and the market prices what we think in too quickly. And then we're like, okay, well, thanks market. Now we're going to sell out because we are right. But like market price too much towards what we think. And then you say thank you and look for other plays.
We got one question from Sterling, or about Sterling. Their call is tomorrow morning at 9 a.m.
Earnings were excellent. I don't know how you can be mad about better than expected everything.
And CapEx continues to rise for all of the end customers. I think after hours they were up though. So
quite a bit, I think. I don't know if it sold off after the rise,
it's
but
low volume.
I think it'll be up a lot. We'll see.
Oh wait, there was a huge volume sell.
It's probably like one person sold a stock or something. Melted it down. Fake Alis is saying that people are going to spend until there's no options left, but we are seeing signs that people are stopping spending. Credit card defaults. You can see like the things that you think people would stop spending on first are happening. They're not buying furniture. They're not, yeah, well, I know, a little on the nose. Soon, I mean, we saw Booking had a rough report. Great company. It just seems like that from what I understand, the report wasn't great. So you're seeing the consumer having to pull back. How much they end up pulling back is the question. We don't know. Jacob, I think you take anecdotal evidence in consideration always. But to be fair, all statistics are a bunch of different anecdotal evidences piled on top of each other.
All right, we got 185 votes in for this. I'm ending the poll. And the winner is most people are ready for the 5th prediction of me, Kevin, on this year's financial crash.
It works, so he gets views with that.
It does. Because he doesn't care about his reputation.
I also wanted to give one company that I think did well, just based on like my quick review of their earnings, was Palantir, which is a company I wouldn't buy because it's too expensive in my opinion. But the company seems to be performing and wouldn't be exposed to the consumer. I wouldn't buy it though.
Commercial and government contracts.
It's very expensive. I think before buying a Palantir, growing, it looks like they're accelerating back up to like, if they're accelerating back up to like mid-20s top line, it could be interesting. It seems really expensive though. I think maybe you look at like maybe an Axon or something if you want that kind of high multiple, high valuation.
With the growth.
Yeah.
All right. With that being said, thank you guys so much for joining us in tonight. Also, if you guys are curious about what the Investing Club looks like, the link is in the description below. And is there anything else I need to say? No, I think that's it. All right. Other than that, we'll see you guys on the next one. Bye. And I'll leave you guys out with the outro.
Okay. We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.